Hello everyone. In this video, we'll be talking about provision for doubtful debts, the different scenarios that we come across in final accounts, and how we can go about adjusting them. Let us have a look at the first scenario that we have. The first scenario is when we have to create a new provision. This information will be given in the additional information like create a new provision for doubtful debts at the rate 5% on debtors. Let's have a look what will be the adjustment entry in the final accounts, and also let's have a look at the journal entry for this. Remember, journal is very important. If we are able to frame the journal correctly, then we can easily do it in the PL account and the balance sheet. So when new provision is created, the journal entry is profit and loss account debit to provision for bad and doubtful debts. As we all know, provision is created out of profit. That is why PL account is debited. And since provision is a liability, so provision for doubtful debts is credited. Having understood the journal entry, let's have a look at the profit and loss account. In the PL account, we debit provision for bad and doubtful debts. And in the balance sheet, we deduct it from the sundry debtors on the asset side, as you can clearly see on the screen. Let's have a look at the next scenario. In this scenario, we have new bad debt that is occurring. However, there is no existing bad debt, and we are also creating a new provision for doubtful debts. Let's have a look at the journal entry and the various adjustments. The first one, as you can see, the journal entry is bad debt account debit to sundry debtors account. Since bad debt is a loss, and as per golden rules, loss are debited, so bad debt account debit to sundry debtors account. And the second journal entry is for creating the new provision, which we already saw in the previous scenario. Profit and loss account debit to provision for bad and doubtful debts. In the profit and loss account, you debit the bad debt account, as you can see here, and also you debit the provision for bad and doubtful debts account, as both of these are losses newly created. And in order to complete the double entry for these, on the asset side in the balance sheet, you subtract the bad debts from sundry debtors first, then the balance amount that you get. On this balance amount, you calculate the provision for doubtful debts. So if the provision for doubtful debts is 5%, which is the case here, then 5% is calculated on this 80,000, which comes to 4,000, which has been deducted as provision for doubtful debts from the balance sheet, and the final amount is 76,000. In the bad debts account, you debit sundry debtors account 1200, and that is transferred to PL account 1200, as we see there. Thank you for watching. We'll be covering more scenarios on provision for doubtful debts in the next video. Look out for that. In the next video, we'll be covering what happens when we already have an existing provision, and on top of that, we are creating new provision. Thank you guys. Take care.